Welcome to the August 2012 edition of BALLE's Accelerating Community Capital webinar series. My name is Alyssa Barron, and I serve as Managing Director at BALLE. We're delighted to have folks joining us today. This series launched in 2011, and we're delighted to be continuing it this year. Our Community Capital webinars are held the second Tuesday of every month at this time, 10 a.m. Pacific. The series runs from January through December 2012 and is co-hosted by RSF Social Finance with advising from a wonderful group of folks listed on our series website. Our series receives underwriting support from RSF, Portfolio 21 Investments, Main Street Resources, and Solidago Foundation. Due to a server glitch, this is a re-recording of our August webinar. In the original webinar, we had about 50 folks joining us from communities across North America. Because it's a re-recording, you will not see the chat window questions integrated in the recording, but you can find a copy of all of those questions along with the server recording for everybody who registered. You'll receive both. So as usual, I'm going to start our webinar with a bit of housekeeping, provide some reminders about our series, and then introduce our topic and speaker for today. This series is explicitly focused on tools you can take home and try out right away. Each month we feature a case study with a community capital innovator, someone who has developed and piloted a working model for connecting local people's investments in businesses and farms to regional needs using regional resources. Our innovators present their model, and we allow time for dialogue and questions. We suggest you treat these calls as an opportunity to bring together a group of business owners, social entrepreneurs, lenders, philanthropists, investors, others in your community who may be interested in that month's topic. After listening to the webinar, you might spend an hour discussing with your group the applicability and relevancy of that model to your community. Next month's webinar will be on community partnership lending. This is a model developed 15 years ago by Alternatives Federal Credit Union in Ithaca, New York. It focuses on making loans to individual and businesses who may be considered unlendable by typical banking standards. It partners a financial institution with a community organization to identify needed loans. So for example, a BALLE network eager to create a mechanism for local microbusinesses can find capital from citizen investors. It works when an organization with relationships to potential borrowers partners with a credit union or bank. So that organization has relationships but little capacity to administer loans. The partner, such as a credit union or bank, has infrastructure in place to make and manage loans, but limits on the types of loans they can make. So the unique nature of a partnership like this takes advantage of each partner's strengths to fill the gaps and make lending to more businesses possible. So we'll hear next month how you can replicate that in your own community. So today we've got Chris Michael, founder and general partner of Workers Development based in New York City, joining us. In our July webinar, we explored a tested model for using local stock offerings to finance 2 community-owned general stores. Today we bring you part 2 in this series, an in-progress model, Workers Diner, which is using a local stock offering to finance a worker-controlled restaurant. Workers Diner will be a family-friendly dining establishment serving traditional New York City diner cuisine in the heart of Brooklyn. Pending funding through a direct public offering, they'll be organized as a worker cooperative with all voting rights and profits retained by worker owners. This is unique. It's very unique to pair worker ownership with a direct public offering. So founders like Chris are intent on establishing a replicable model, and we want to hear today how they're doing in their progress toward that goal. Chris is also completing a JD and PhD at the City University of New York with a focus on cooperative financial structures and community economic development. He's also very active in the national worker cooperative scene. So with that, Chris, I am going to turn the floor over to you to pull up your website and take us through how things are going for you. So okay. I am turning the floor over to you right now.
All right, fantastic. Thank you so much, Alyssa. And I'm just getting my sharing
We'll give you a moment.
Screen.
We won't expect you to chat and pull your screen up at the same time.
Just want to start the share. Looks pretty good. Okay, you got it now?
Yes, we can see it. Great. Thank you.
Fantastic, fantastic. Okay, so my name is Chris Michael. I'm the secretary and CFO of Workers Diner. I'm also one of its founders. I'm also a founder and partner of Workers Development. And Workers Development we consider sort of like the development side, the development organization behind Workers Diner. Workers Diner, we're planning currently Workers Diner to be a family-friendly restaurant in central Brooklyn. It'll serve your traditional sort of cuisine and diner cuisine, and it's a place where all should be welcome. We do hope to have sort of targets for local and organic food. We also want to hire people from the local community. We'd also like to target some of our produce to be sourced from within a 100-mile radius of central Brooklyn. And we want this to be a worker cooperative. We want it to be one worker, one vote. We want profits to be retained by the workers. And the way that we decided to move forward as Workers Development and as Workers Diner, in this first project, we'd actually like to open up many such diners. In this first project, we decided that we wanted to pioneer a new way to raise money for worker cooperative businesses. One thing that's really hard to do with worker cooperative, although they work fantastically. There's lots of examples of sort of stellar worker-controlled businesses all over the world. But one ongoing enduring problem, aside from a general lack of awareness about worker cooperatives, is it sometimes can be difficult to raise capital for worker cooperatives because the same financial incentives aren't in place that are in place for traditional businesses. If I was starting up a new website, I might be able to and there wasn't a worker cooperative, I might be able to promise investors triple their investment or ongoing profits for the end of time based on the growth of the business or the sale of the business. But we're not able to do that for worker cooperatives, and so I'm going to go right now into the specifics of our offering, and you can see how our worker cooperative stock offering is a little bit different from a traditional stock offering. I should say our worker cooperative direct public offering is different from a traditional direct public offering. So, we were lucky enough to hear last month from Melinda Little from Community Store of Saranac Lake in New York State, and Marty Gay from Quimper Mercantile Company in Port Townsend, Washington. And what they did is they opened up general stores in their towns, and it's really fantastic. It was really fantastic to hear their story. They decided they wanted to keep ownership local, and so they sold common stock, which to local people, and that would mean that local people who invested in those businesses would be allowed to vote and to control the business and to have profits of the business and to make decisions about where they want to make profit and where they don't want to make profit. And that's actually, that's fantastic. That gives the sort of that allots a great deal of power to the local community in determining how they want their business to be operated, what products they want to buy, where they want to purchase products, what sort of effects they want to have on the local environment, perhaps in their waste management practices, for example, or in the cleaning chemicals or products they use for the store. We're doing something a little bit differently. The technical structure of our direct public offering is that we're selling $500,000 in shares, and that's about the same amount that those other two companies I mentioned offered. Except we're not selling common stock. We're selling preferred stock. Our preferred stock doesn't entitle a vote to the shareholders. Our preferred shares don't allot any share in the profits of the company to the shareholders. Rather, it gives those preferred shareholders a fixed interest return on the face value of their investment. So, okay, that's a little bit different. That's something that people perhaps might not have heard of, but it's important to understand why we're doing this. We're doing this because we really believe in a vision of a democratic economy, an economy where businesses are economic communities, are moral communities, and where the people who work in those businesses are members of those businesses rather than employees, or the legal term that was used before employee was servant. So that's the kind of economy that we'd like to see. And in order to fulfill that vision of that economy, we need to use slightly different tools. Now, the preferred share has been around for about 100 years, and so we're sort of repurposing an existing tool. And just to be clear again, the reason why we need to use preferred shares is because by having this preferred share, by having only preferred outside and preferred shareholders, we allow only the workers to have voting control of the company. We allow only the workers to benefit or to benefit from the profits of the company. And that's the kind of economy that we'd like to see, and that's really our motivation for this project and our mission. Without that piece, we wouldn't be doing this. That's the technical side of it. Just want to mention for one moment who we are. I haven't said too much about that. My partners and I, we've met in New York City through both the local worker cooperative scene. We met, my partner William Cerf and myself met through an organization called Green Worker Cooperatives, which was doing some educational classes about worker cooperatives back in, this is like early 2008. And we've been working on this for a number of years, and William Cerf knew Gabriel Martinez, another one of our partners, through the Restaurant Opportunity Center of New York, which is a workers' rights center, a restaurant workers' rights center, and is also involved in worker cooperative businesses. In fact, they launched a worker cooperative restaurant here in New York called Colors, which involved the workers, the former employees from the World Trade Center's Windows on the World restaurant. So that's who we are, and we've been working for a couple years now, as you can tell. We met in early 08 or early 09. Maybe it's early 09, my mistake. I think early 09. But in any case, it's been about 3.5 years, actually, that we've been working on this. And we're happy to say that we feel a great amount of success in what we've accomplished, in as much as this is the first worker cooperative direct public offering, possibly in the last 100 years of U.S. history, possibly ever in U.S. history. As you can hear, it's sort of a unique. It's both a. It's really. We hope to consider it really a unique investment opportunity. It's something that people. I know that a lot of people that I was raised around in my family really. Had values that emphasized the negative, that put a lot of emphasis on the pain and the difficulties, the psychological and suffering and impoverishment that it was attendant on exploitation of workers. Those were values that I was raised with, and I know those were values my directors share. And we really feel like this is a unique opportunity to invest in such a way that workers are not being exploited in a sort of classical way of using that term. We went live right around May Day, and we had a May Day launch party. And I just want to, this is our main website here. And you can see here we had a May Day launch party down at the Breck Forum, Lower Manhattan. And we, again, we're really happy about going live like that. We've managed over the years to accumulate a sizable, not just our board of directors here, but we have a sizable advisory board with chefs, with the executive director of the U.S. Federation of Worker Cooperatives, with a wonderful lawyer, Jenny Katzen, who's probably a lot of you have heard of, and her company, Cutting Edge Capital. We have general managers of restaurants and clubs as well, website, user interface, experts. Michael Van Patten from Mission Markets, who's going to be collaborating with us to sell some of the stock. And we also have Barry Wall, who's a professional restaurant developer. And he's going to be helping us bring the project to fruition after we finish selling our shares. We also have managed to gained the collaboration of a company called Funding Launchpad, and they've recently offered us a new skin for our website. Although we'd already been selling our stocks online, or made our stocks available online, they were kind enough to share their platform with us, which allows users to ask questions, and we can provide answers right there, as you can see. And yeah, you can purchase shares directly through this site, and you just literally click Ready to Invest. You can see there's a video there with me in it, a little embarrassing, that my wife put together. If you want to take time to watch that, it's a first cut. Ultimately, you can, if you'd like to, you can complete the purchase agreement right online. This is the purchase agreement. You can enter your information right into here, how much you want to buy. The minimum purchase price is $100. That's 4 shares at $25 per share. Enter what state you're in. This is only available in Connecticut and New York right now. Should soon be available in New Jersey, but it's not available in New Jersey yet. You do have to, unfortunately, enter your Social Security number in there. That's required by the SEC. It's not entirely comfortable for us, but that's what's required. This section is a little confusing. I have the inclination to simplify it. For most people, you would just keep it as individual ownership. You initial, and some of the date would just get filled in by what you do above, and you click Buy Now. You get forwarded to a PayPal page where you're doing that. By the way, I should mention this page is secured. You can see the green bar at the top, and you can also see the sites that I often frequent. Of course, PayPal is secure, and that's a third-party transaction. And so it's all very exciting. At the same time, and I'll wrap up, at the same time we definitely are having challenges, or we sort of see a lot of challenges with our model. For one thing, while the Jobs Act legislation, which has been passed, and the crowd financing legislation that has been passed, will, I think, help to popularize this idea of a direct public offering. It's still not very well known or understood, and while one would think that being ahead of the pack is an advantage, it has its downsides as well. There's not a lot of awareness of what a direct public offering is. And to boot, we're doing this as this doubly complicated thing. It's not just a direct public offering. It's a worker cooperative direct public offering. So, what's that? What's the elevator pitch for that? It's a kind of a lot of information to convey. We could just say it's a cool diner in Brooklyn, but I don't know. That's not the heart of the project for me. I mean, it is going to be a cool diner in Brooklyn. There's a lot of cool restaurants in Brooklyn, but the heart of the project is really this alternative vision of our economy, and be able to express that in such a way that potential investors understand it in a neat, clean, and simple way. It can be challenging at times. We're also confused, or I shouldn't say confused, but I mean we have to face head-on the challenges involved in the lack and the different sort of incentives that are lined up for our investors. The investors in Quimper and Community Store in Saranac Lake, that's exciting in a different way. They get to partake in the profits of this local general store. They get to sort of be a part of this club that's the investors, the common shareholders that can make decisions, about the store. We don't want. We want people in this sort of larger club of supporters of Workers Diner, but our investors aren't going to be really a part of the club in the sense that they're not going to be making decisions. They're not going to be invited to an annual shareholder meeting where they're not going to be voting on the board of directors. They're not going to be voting on shareholder resolutions. That's cool stuff. That's human nature. That's like a lot of times why people buy shares in the traditional capitalist market. You buy a share in Apple so you can go to an Apple shareholder meeting. Just kind of a cool thing to do. But that's not an incentive that we have to offer. Although perhaps, we can offer other sorts of incentives to preferred shareholders. Nothing stops us from offering 1 free meal a year to preferred shareholders or something like that. But we'd have to put that we'd have to put that in writing. And the last sort of challenge that I think I'd just like to mention is the different sort of scale of the market for these shares that we're dealing with, as opposed to Melinda and Marty in upstate New York and in Washington State. They were opening a general store. I think in both cases, in the site of an original general store that had been closed down in that town. So they were sort of opening up, they were filling a real concrete need, right as they both sort of said, I believe, it was almost like a hole in their community. Both of these communities had these general stores that had shut down. They were filling this need. They were building a lot of community support from those towns, right in that community. In the case of Port Townsend, there was they were able to tap into a network of local investors, and in Saranac Lake, they just sort of it was a real long haul, 3.5 years to raise the $500,000 they needed. We have a different problem in New York. Sure, there's a lot of money and a lot of people here. We're not filling the same sort of smack in the face hole in the hole. There's plenty of restaurants in Brooklyn already. We're not filling that same sort of apparent need that they were both filling. But we're also dealing with New York City, and everyone's got a concern, and everyone's got a cause, and there's just so much going on. It's not so easy to get and maintain people's attention here in New York City. And moreover, even doing something like holding a party becomes so much more challenging in Manhattan. As everyone out there has probably heard, space is a commodity here in New York City, and just to find a space to invite some people to, that can be a challenge. Certainly to cater the occasion, to provide drink for the occasion. Those are expenses. And those are expenses that we're not always going to be able to meet. We spent quite a bit of money on our May Day launch party. We got the space. The space was sponsored by the Brecht Forum. But moving forward, Quimper Mercantile, I should say, they had a fairly sizable budget. I think $50,000 to spend on marketing and parties and events. And Community Store in Saranac Lake was able to get investors' attention and individual attention enough that they were able to have individuals hold investor parties on their behalf. And so those sort of things, both having a funding set aside to market these shares and to hold parties for investors, but also to be able to sort of keep people's attention and interest long enough and have them sort of hold investor parties on our behalf. Those are the sorts of things we'd like to do moving forward, and that are real challenges, I think, here in the city. So without further ado, I'd be happy to answer a bunch of questions.
All right. Thank you, Chris. It's really interesting to hear kind of where you are in your process and to understand so well what your motivations are as a business and where you're trying to go. So we got a bunch of questions in our live webinar about the basics about how you're setting this up, some legal pieces, how you're marketing and promoting the opportunity, and then how this works for both investors and for workers. So let's move through as many of those as we can. So you mentioned you had up on the website for anybody who noticed how much the shares are and whether there's a minimum investment. But can you briefly explain that verbally?
Yes, I didn't go into as much detail as I would have liked. And I should say also that Marty and Melinda did an excellent job of explaining some of the mechanics of direct public offerings in their webinar last month. Also, Marty is fortunate enough to live in the state of Washington, but you don't have to live in the state of Washington to benefit from the state of Washington's excellent website on SCORE. What we've all done, all of us did these DPOs as SCORE offerings. That's SCOR offerings, small company offering registrations. And as it happens, Washington State just has a wonderful information-rich website. You just Google Washington State DPO SCORE, and you'll come up onto their website. It's a lot of information there. Really boils things down for you on how to conduct these offerings, and that information is valid for everyone, and regardless of where you live. So the mechanics of my particular offering is that we're offering each preferred share costs $25, and we're requiring people to make a minimum investment of 4 shares of $100. That investment will receive 3.25% fixed, non-cumulative fixed dividend. So if we the way preferred shares work is if a company can't pay preferred dividends in a given year, they don't necessarily have to make up those dividends they didn't pay in one year in the next year. So that's what non-cumulative means. It means that if we can't pay it one year, that doesn't mean that we have to pay it next year. 3.25% fixed just means that whatever your initial investment was, we're planning on paying you 3.25% of that face value. So if you invested just that minimum of $100, we'd be sending you a check for $3.25 every year until the end of time. These shares are tradable, so you can sell these shares to other people. You can't buy them with the purpose of selling them right away the next day for some reason. I mean, that's not legal, but you can buy them and you can sell them. And we're hoping that Mission Markets is going to provide a secondary trading platform to sell these shares in the future. But we don't expect a strong secondary market. We don't expect there to be. We should say we don't expect people to be. If you buy stock in Workers Diner, we don't expect people to be knocking down your doors to buy these shares from you. The point of our offering is to create worker cooperative jobs. That's the real dividend. The financial dividends that we'll be giving are sort of a way of keeping the business upright, keeping it moving forward, keeping it competitive, building a kind of a competitive mode of investments in worker cooperative businesses and of gathering capital for worker cooperative businesses. It's healthy for the business to have to be able to pay dividends and to be responsible in that way to outside investors. But that's not the real point of this. If you're investing in Workers Diner, it's not because you want to get rich. In fact, if for some reason Workers Diner was ever to be sold, the investors would receive as best as possible the principal amount of their investment. But beyond that, any profits would be given, would be donated to the U.S. Federation of Worker Cooperatives. So everyone should be duly cautioned that if they're investing in Workers Diner, it's because they want to make an investment in a new economy, and they want to make an investment that doesn't participate in exploitation of workers, as I've defined it.
Thank you. You mentioned that you worked with Jenny Casson as a lawyer. Of course, you yourself are in the process of getting your law degree in just this kind of area of work. But what were the legal fees for putting together the offering documents and the prospectuses? What was that process like? You mentioned that right now you're making the offering in Connecticut and New York, and you're hoping to make it available also in New Jersey as the states that immediately border New York City. So what was that process, and what were the costs like?
Sure. So, well, I'll take Jenny out of the equation. We worked out, this is the first direct public offering that Jenny did a few years ago. Of course, she's moved very far ahead now, and she's had her hands in a lot of different projects. We worked out our own little arrangement with Jenny. It was very generous, that arrangement. I won't go into further detail. And I tried to sort of keep as much of a burden off of Jenny as possible and doing my own research and putting the prospectus on offering, the prospectus together myself. But of course, she was our legal advisor, and she did check everything over. And then as far as the fees with the states are concerned, so the way score offerings work, remember when I first started out on this, I was just adamant that this was going to be a 50-state national direct public offering. And as we came to discover, there really isn't such a thing. I mean, that's not the way it works. If you're doing score offerings, if you're doing direct public offerings, then you're going to be registering state by state. And if you want to register in if you want to attempt to register in every state, be my guest. And what I'm saying now might change, of course, with the new legislation. It's not entirely clear to me how that will be affected. That side of it will be affected. But the way we had to do it is we had to go state by state. We decided to not to try to do 10 states or 15 states, which we could have done. We could have approached a state like Vermont or something, which is very lenient and very comfortable in licensing, permitting direct public offerings, and we could have maybe tapped into a sort of a social justice community in Vermont, and that might have been a fantastic way forward. I wouldn't even say it's completely off the table for that matter. But we sort of settled on New York, New Jersey, and Connecticut because it had a nice ring to it. It's simple to say, it's easy to express. If we can't raise $500,000 in our own, right here in the heart of New York City and in the metropolitan area around it, the larger metropolitan area, then I don't know. But so, the tri-state area seemed to work for us. And so we first applied in Connecticut, and I think we had about $800 in fees in Connecticut to do a $500,000 direct public offering. If you go above $500,000 and you want to raise a maximum offering amount of between $500,000 and $1 million, then you would incur a slightly higher set of filing fees in all of these states. But in any case, it was about $800 to file for the $500,000 direct public offering amount in Connecticut. We were approved there in November of 2011. And then we proceeded to quickly file our paperwork with New York. And New York is a very lenient state. As long as you're approved in any other state, then they approve you. So New York happened really quickly, and we were approved by mid-February. And there was another $650 of filing fees, I think, for New York. And then once New York was good, we then started the process in New Jersey, and we're still completing the process in New Jersey. The filing fees in New Jersey, again, for this $500,000 range, was $1,000. So it's not nothing if you're someone like myself who lives on student loans and doesn't have a lot of outside support for this project yet. At the same time, it's not an insurmountable obstacle. And if you're a business that wants to just file in their own state, like community store in Saranac Lake and Port Townsend did, then you would just be dealing with sort of one state's fees, which might be $650, anywhere from in our experience, anywhere from $650 to $1,000.
All right, thank you. And a related question, you mentioned, of course, that you've done this as a score offering. Is this Rule 147 or an intrastate exemption? I don't actually know what that means, so I hope you do. Sure, it's not an intrastate exemption. We considered doing an New York intrastate offering a while back. In fact, I first discovered the score offering thing through my own research, and then started to put together the paperwork. And then, for whatever reason, I started talking to Jenny, and for whatever reason, we decided to switch and do this as a New York intrastate offering. And then we started putting that paperwork together. And then we found out the filing fees wouldn't be too bad, and we could, for the same amount, we could file in New York and Connecticut, and then we switched it back to the score offering. And it should be 504D. I heard the Section 147 thing this morning in a conversation, in a business call I had this morning, but it's 504D. That's the SEC rules. Great, thank you. Let's see here. There was also a question about, for folks who may be relatively new to direct public offerings and understanding how a direct public offering differs from an ESOP or employee stock ownership plan. So an employee stock ownership plan can look like a lot of different things. ESOPs can be really from someone like myself who's very much attuned to issues of workplace democracy and worker control. ESOPs can range completely. There's a wide spectrum where they can be very, very good in terms of someone the perspective of someone like myself in terms of giving a lot of control and profit rights to workers, or they can be very superficial and perhaps bordering on bad, and to the degree that it might be a danger for workers to sort of invest too heavily in one business. It might not really, may give no control to workers. It might just sort of be a big tax write-off
for the existing owner investors. So they range in the ESOPs are a way of selling stock. Most commonly, most concretely, it's a way of selling some stock to some employees. That's very distinct from what we're doing. We are giving voting control and profit rights only to current full and part-time employees. And it's one worker, one vote when it comes to voting for the board of directors.
And then, of course, the local stock offering is a way of raising capital for small businesses, up to $1 million. So you're pairing you're pairing this way of kind of bringing in community funds, but then with worker control, whereas an ESOP is taking existing investment in the business and opening up shares to employees in some way. And you noted a range of different motivations folks might have for doing that.
Precisely.
All right. Let's see here, moving through some more of the kind of basic foundational level questions. There was another question about whether you could use a direct public offering for a micro-enterprise business, and would that look different? So to me, really, this is a question about the scale of a business, an intended business, and capital needs that might be appropriate for going through the process of a local stock offering. Do you have any thoughts about that?
Yeah. If you're incredibly comfortable in putting together this paperwork, which is not overly challenging, but if you're very comfortable putting this paperwork together, and you want to raise $50,000 for a microenterprise, sure, you could throw this paperwork together over the course of a month or two. Have it approved by your local state securities board or Attorney General's office or whatever, and start selling stock, and marketing stock to local investors and selling this stock to local investors. It's probably not, and to be clear, with the direct public offering, you can stick your head out the window. You can yell it to the world. I mean, you're selling stock. You can Facebook it. You can tweet it. You can email blast about it. It's called general solicitation. You can publish an ad in the newspaper, in the local newspaper, or the New York Times, saying I'm selling stock in Workers Diner or for this microenterprise. But it really might not be the most effective or efficient way of raising money for a microenterprise. It should be clear that you don't need to do a direct public offering to raise equity capital, to raise this type of stock investments in a micro enterprise. You can do what's called a private company placement. Well, first of all, if you have under 40 investors, giving you broad terms, every state has different laws. Everyone out there, we live in a very strange country. It's a very wonderful country. It's a very strange country. We live in a country where we have 50 states, and every state has its own crazy laws about everything. Kind of insane, and so anything I say right now has to be understood in that context of our unique federal system of government. So in most states, if you have under 40 investors, you don't have to really do anything much in terms of selling stock to those few investors. So if you only want to raise $50,000, and you've got 5 people who want to each invest $10,000, there's really not much you have to do paperwork-wise. You definitely wouldn't want to be doing a direct public offering. You talk to a lawyer, but you would just sort of directly sell them the stock. You wouldn't have to get approval, per se, from the state. It could be done fairly simply and fairly quickly, in a matter of days, I believe. You would have to give them probably literature, but it wouldn't have to be approved by the state, I don't believe. If you want to have over 40 investors, now again, would you need more than 40 investors to raise $50,000? That's questionable. But if you needed more than 40 investors and you wanted to have up to 400, let's say, I think around 400 investors, 400 or 500 investors, depends on which state you're in. I think 500 investors. If you have up to 500 investors, you could do what's called a private company placement, and now you have one slightly higher level of scrutiny. Now you still have to file paperwork probably for the state. You can't Facebook about it, you can't tweet it, you can't post ads in the newspaper, but you can have hundreds of investors. And if you feel like you need hundreds of investors to raise $50,000, you could do it this way. Again, you still have to file paperwork with the state, but the scrutiny is less. It's not going to take as long or be as difficult to be approved. If you want to have above 500 investors, if you want to be a knucklehead like myself and you want to raise $500,000, real big money people don't see $500,000 as a lot of money. For them, this is probably a micro enterprise. So for them, for big money investors, they think $500,000. Why would you need more than 40 investors for that? Now, I see things a little differently from my vantage point in the world. $500,000 is a decent chunk of money, and I can see the utility of having lots of small investors each throwing in $100 in raising those funds, and that's why we went down this path. But I hope that just gives a general sense of the sort of the different tiers of the different sort of tiers or sort of different paths you can go down in terms of raising equity capital. But, if you take all of that aside and think about how much, if you put all of that aside, at the end of the day, if it's only $50,000 you want to raise as a micro enterprise, you might just have better luck. People might be opposed to this sort of ideologically, but you might have better luck writing a grant application or asking for donations or doing a Kickstarter thing. Those things are sort of so much easier to do. And these things can all be used in combination. There's another important thing to think of, and something that we haven't taken off the table either. We can't accept stock purchases from other states, but we can accept donations from other states. And in fact, we have a donations tab up on the website. I don't know if it's still there at the moment. If you do like to invest in Workers Diner, if you would like to donate in to Workers Diner, it wouldn't be tax deductible, but you could certainly donate to Workers Diner, and if you're out there and you want to, you can contact me, Chris at workersdevelopment.com. But that's not really the main route that's not really the main path that we wanted to go down. But it's something that's open to us, and it's something that's open to people out there as well. You can have grant applications, you can have direct donations, and you can also do an equity piece as well.
Great. Thank you. Very thorough, very helpful answer. How much have you raised so far?
We've gotten about a couple $1,000s in stock subscription requests.
Great. And what do you mean stock subscription requests?
We've gotten a couple $1,000s of requests for stock purchases. We haven't formally approved those requests because we're still waiting. We're still waiting on some of our paperwork, with New Jersey paperwork to clear before we officially accept those requests.
Great. Let's see here. Okay, and I think you've actually covered this well already, but just to be sure, maybe we can just touch on this very briefly. You explained the difference well between preferred and common stock. And so we'd had a question in our live webinar, what's at stake if you choose to go the common stock route? And really, as you explained, common stock would confer voting rights and preferred stock does not. Is that right, put simply?
That's simply put, yeah.
Great. All right. Now let's move into some additional questions about marketing as well as kind of how this works for investors and worker owners. So you've talked about the kind of different motivations that an investor might have in Workers Diner than, say, a community-owned general store or other kinds of businesses. And, of course, that you're hoping to pull from many small investors. Do you think, and are you cultivating any strategies around, as a part of the shares that you'll sell, actually targeting a few high net worth individuals that could help you reach your impound level?
Yeah, definitely. That's what we're going to be getting help from Mission Markets with. They're going to be, two things. One thing is that Funding Launchpad is going to be doing a push for us. They've given us this extra web skin to put on our website, and they're going to be spending some PR money to hopefully push our name out there and get our name to people that, some of their, get our name out there a bit. in as much as they're sort of partnering with us and giving us this free tool. But also Mission Markets is going to, which is sort of already sort of involved in getting investments for sort of social entrepreneurship, environmentally sort of based sound companies, B corporations, etc. And they have a community. They're networked into the sort of high net worth. From my understanding, it's sort of the high net worth investor community here in New York and Connecticut, and we have only the highest hopes as far as that collaboration is concerned.
All right. And how do you think investors evaluate risk and rewards for a startup business?
For a startup business, I don't know if you could reframe that question for me. I feel like I might have addressed it earlier.
You certainly may have. That's all I've got. Is what the original request.
I mean, again, as I said, I don't know how investors would address risk and reward in your average startup. As I spoke to this issue earlier, I mean, the risk is that you lose your money, and the risk, the real risks here are that you invest this money, you lose it, you never see it again, and not a single worker cooperative job ever gets created. I mean, that's the most worst case scenario thing. That's the worst thing that could happen. I don't envision that happening. I'm not sure how that would come about, but that's the worst case scenario. What are the rewards here? I'm not sure that's how you would perform a risk reward. I mean, you'd probably want, a real sort of cost-benefit analysis. You would sort of, I don't know if we want to get into this, but you would sort of lay out the different possible risks that could occur and different rewards that could occur, and you would sort of rank each risk either monetarily or in other terms, how valuable it might be to you, and then you would allot probability of each of those things happening, each of those risks or rewards happening, and you could do sort of a computation based on that if you wanted to sort of analyze it strictly. But I mean, worst case, best case scenario. If we're sort of speaking in simpler terms like that, worst case scenario I already laid out. Best case scenario, we build an institution that is enduring through time, and that lays the seed for an institution which doesn't just have 20 worker owners, but we lay the seeds for an institution that grows over time and grows into not just one worker designer, but grows into many, 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 many worker designers and hires many, many, many more worker members. The restaurant industry, the reason we chose the restaurant industry is because it's such a big employer outside of government and healthcare. It's like the largest small business here in the country, and so we saw it as an industry that was sort of scalable. It wasn't super expensive to get into. We weren't starting, a steel foundry or something like that. A restaurant something that we can wrap our heads around. $500,000. Again, it is a lot of money, but it's also not a lot of money. It's not $60 million to start this business. It's only $500,000, and it's something that we hope to be something that we will be able to replicate ourselves with more worker designers. But we hope it's also something that other people can replicate as well. So those are the sort of risks. Sort of worst case, best case scenario that I see.
Great. Well, thank you. I think asking about investors evaluating risk reward is a bit of a technical question, and I think you answered it as well as for everybody else, kind of explaining what that thought process looks like. Another technical question, is income from preferred shares considered interest or dividend income?
I don't know. I don't know I don't know if there's like a real. Probably would be different things for different purposes. I mean, technically they're called dividends. Okay. They are dividends. So I'll leave it at that. But you would call it different things for different purposes. The IRS might call it one thing. The SEC might call it something else. When you explain it to your mother, you'd call it the third thing. So I'll leave it at that. They're called
but
dividends.
Technically, they're called dividends, right?
Yes.
And
yes.
you explained already, non-cumulative at the fixed amount of 3.25%.
Yeah. Right.
So exit strategy for investors. We had a question about this. How easy is it to get your money out? Is people exiting going to be very administratively burdensome for you? So you mentioned, of course, that you'll be working with Mission Markets to establish a secondary trading platform. So that, and I imagine that would only be open to the folks in the same states as those that could initially invest.
No.
It won't be.
No, that's open for everybody. But I really want to stress that the secondary market for this is not really something to. Don't expect there to be a strong secondary market. It's not
I think
anybody should rely on. Yeah.
So you were clear on that. So I think this question to go further is there any other way, to exit as an investor, to get your money out if not reselling?
Right now, no. There's something that could change in the future. We wanted to make, again, this is not something that people are going to get rich doing. And this is the first time possibly in U.S. history that a worker cooperative has conducted a direct public offering of stock. Something similar was done by Equal Exchange. They did a private company placement. They've got 400-odd investors all over the country. They have millions of dollars of preferred shares sold through that process. And what we're doing is similar to what they're doing. But this is the first direct public offering that's been done, and we wanted to do it in such a way that was safest for the business. We don't want to raise a lot of money and have the business fail. We want this to be extremely comfortable for the business. So to that end, we don't offer an exit strategy. It's certainly possible that an investor can approach Workers Diner in the future in a time of economic well-being, and the business could say, you know what, we're doing fine. Our savings are looking great, and we have the money to pay you your principal back. So yes, we will repurchase your shares. But there's nothing currently, and I emphasize currently, nothing currently in our prospectus or the offering literature that confers that right to preferred shareholders. So right now there is no exit strategy per se. Again. That is something that could change, and it's something that I would like to change in the future. I mean, I want these shares to be competitive. I don't see this as being per se in the exact form that we're doing this offering right now, today. I don't see this as being per se sustainable into the future. I think that this is something, ultimately, worker cooperative shares should be competitive in the market to some extent. They don't have to be completely competitive in the market, but to some extent they should be competitive to dividends offered by other companies, like traditional capitalist companies. And so in the future I would modify that. But this first go around we wanted it to be very safe for the business. I hope everyone understands that.
Yes, thank you. And let's see here. We've got maybe 5 more minutes and a handful of additional questions, so we'll see how many we can power through. We had some questions about how are you promoting the offering. So you mentioned that you had this May Day launch party. We had a question about whether you tried something like Kickstarter or whether you were doing a social media push. My sense is you're trying a number of things. So can you describe a bit about how you're promoting the offering?
Sure. Yeah, we're definitely doing all the social media stuff. I mean, we have blog posts, we do emails, MailChimp, we've had Facebook and Twitter going for a long time, and we do cool things that you can do with a direct public offering, like say, invest in Workers Diner today. Click here to invest. And we can tweet that. It's pretty awesome. I've spoken to a number of other people, though, who are in this sort of world of crowdfinancing, either, Kickstarter-style things or, and there is a general, from what I've spoken to people, it's as enticing as it sounds. And that's, one of the reasons I embarked upon this sort of adventure that I'm involved in with this direct public offering is I thought that would be really cool. I thought this could be like Barack Obama's campaign, where click here to invest to donate $3, and people will start clicking. It's a little different with equity, I've been finding. For one thing, it's not as easy. People are worried about sort of legal liability. Not that they should necessarily be worried. But they are worried. when you tell people it's an investment, they get very nervous that maybe it's a con or something like that. Whereas we're not asking for something altogether different from a donation. I kind of like to think of this as like a really cool way of donating money. I mean, that's one way of looking at it. Again, I'm not promising anyone to be rich.
Money with potential dividends.
With potential dividends, exactly. So, like, it should be clear to everyone out there that, like, I'm not offering anything to be, anybody to get rich off this, and it's quite explicit that you're not going to get that much reward in the best case scenario. But people hear stocks and they get nervous, and that's completely understandable. So,
how does that relate back to your marketing and how you're marketing?
That relates back to our marketing to the extent that, it's not always easy to turn a tweet into a closed investment, and into like a completed investment. Like, there's just a lot going on there in cyberspace, and when you tell people click here to invest, that's, in my experience to date, that doesn't really turn into shares being purchased. Maybe people look at it, maybe people will friend you on Facebook and think it's cool, maybe people will follow you on Twitter. But I think ultimately, as cool as the social media front is, and as absolutely important as it is in building brand awareness, I think that when it comes to like investing, you really have to go out there and shake people's hands and meet people in person and get that kind of trust. Again, even though I'm really not offering anything much more than a really cool way to donate with a possible slim chance that you'll get a slim little return on your investment. I still think that in person, shaking hands, making eye contact, I think that's really important. It's something that I want to do a lot more of when we have the opportunity. So we've been doing the social media thing. It's not legal for Kickstarter to list our company. It's not legal for us. It looks like Mission Markets might list our company on their website. That's a very new development. I can't really speak much more about it. But missionmarkets.com, they might be listing our offering on their website. But, Kickstarter can't do it. That's not what they do. They do donations.
Great. Now, we've got a couple more questions. I'm thinking maybe 30 seconds each in an answer, and then it will end on a final philosophical note, because I know you're very driven by mission here. So we'll start with the quickies. Will founders be owners of Workers Diner to any degree? Will you and your co-founders?
That's a great question. And it's also like a unique part of our, let me not get too deep on this, it's sort of a unique part of our sort of vision of how we're developing worker cooperatives. It's also sort of a new idea, I think, of how to develop worker cooperatives. But the short answer is, so there's more to get into if people want to talk to me about this, but the short answer is, no, we're not going to be owners, because we're not going to be, it's not likely that we're going to be workers at the business. So right now, the three founders were the only people who hold a common stock each, because we're both sort of working to build this business, but we're not really employed by the business per se at the moment. But ultimately, once we hire once we open the doors of the business and we hire the workers, after a probationary period of 9 months to 6 months, 9 months to a year, those probationary workers will then become full worker members. They will be issued one common share each. That will give them voting control of the corporation, and the original founders, we will not have any control or profit rights to the company. If they want to elect me to the board of directors in the future after that first year, I'd be honored, but they are entitled to do whatever they want.
Great. And do you have a board right now? How active is it? Do you have regular scheduled meetings yet? You mentioned that you could potentially be elected to the board if the workers decided. What is your board structure? Well, so, we have a Workers Diner has a board. Workers Development is legally a partnership. Workers Diner is a worker cooperative. It's also registered as a C corporation. And so Workers Diner has a board of 3 right now, which is the same people who are the partners at Workers Development. It's William Cerf, myself, and Gabriel Martinez. And we all are working on this project. So, when you have same people are working on this as are the board members, sort of like every day becomes a board meeting to some extent. Great. To some extent. Some people do. But so the board can grow and will grow as once the business opens.
when the business opens, we have it in our bylaws that the board will be will ultimately have 5 members on it. Yeah.
Great.
And that board will be elected by whoever the current worker owners are in any given year.
Great. So are you on the radar screen of New York City economic development organizations, and have they been willing to provide any support, which again could be just another funding strategy in addition to your direct public offering?
Well, funny enough, I helped start this organization called New York City Network of Worker Cooperatives. It's a local chapter, a regional affiliate of the U.S. Federation of Worker Cooperatives. And we were really lucky to get a call from City Council, and that resulted in a $150,000 grant, which was directed to a nonprofit called Center for Family Life in Sunset Park that's doing worker cooperative development, and a really good job of it. I haven't really approached the city on other things. I think that was a one-off situation. I think it is absolutely invaluable moving forward into the future to have government assistance and collaboration in developing worker cooperatives. Cooperatives is something that I'd like to work on a lot more in the future, but I haven't approached city government about this particular business.
Got it. And let's end on this one. And let's maybe take a minute or two, and I know you could go into much more detail, but we had a number of questions and folks really trying to understand, this model, again, of pairing the worker control with the direct public offering. And so somebody said, control is different than profits. You could keep control with the workers, but still give some of the profits to investors. So can you explain why you've designed something that has control and profits totally working in tandem?
Sure. I'm going to be a little geeky and say that this is an issue that has been written about at a theoretical level by a number of academics. And the pure matter of the fact is that I'm actually much more interested in control than I am in money. If I was interested in money personally, I probably would be doing something different with my time. Although it is important, of course, for everyone to have a livelihood.
And it might be important to your investors. They might, yeah.
It could be important to our investors, of course, that they be given a more substantial sort of a piece of the profits. And so, at one level, sort of theoretically, I'd be much less concerned about parting with profit rights or allotting some of the profit rights to investors. And as long as workers maintain control over the corporation, that's something that isn't the worst thing in my mind. Other people would argue differently and say that workers must get all profits. That's something that I could be flexible on. But I think there are a number of practical concerns there. I mean, assuming that workers do have full control over the firm, it would be considered what's also known as a labor-managed firm. Then, all sorts of sort of practical issues come into play. So, for instance, the workers could simply raise their wages, their salaries, could give themselves more on-the-job perks, buy themselves all company cars. I mean, these are real practical. It sounds funny, but these are real practical concerns, such that there are no profits left for investors. I mean, I'm sure everyone's heard of this. Never take. If you're ever a multi-million-dollar movie star, never take percentage points on the profit. Always take it on the revenue. So ultimately, giving investors profits might sound cool, but it might practically not work out if it's a true labor-managed firm. If it's truly a worker-controlled firm. So in many ways, it's actually safer for the investors. In many ways, it's actually safer for the investors to have this fixed dividends or fixed interest return on their initial investment.
All right. Well, thank you very much, Chris. We know that this is really your passion, and it's all in progress. So it's really a special treat to get to hear how things are going, as well as your goals. I know because you so strongly, along with your co-founders, intend for this to be replicable, that you've encouraged folks to go to your website and also potentially to email you if you have questions. So could you remind us of your email address?
Sure. please, I'm so responsive. I so love talking to people about this stuff. I'm always free for an email or for a telephone chat. You can reach me by email, and I can give you my phone number as well. You can email me at chris@workersdevelopment.com. Should also mention there is an FAQ page on workersdevelopment.com. You know, please take advantage of that. Take advantage of me. I'm here to help, you know. And so I'm always happy to speak about this stuff.
All right, wonderful. Thank you very much. And so again, after each webinar, all of our registrants can expect to receive a link to the webinar recording, any presentation materials, in this case a link to the websites that Chris demoed, and a copy of the questions from our public chat window. Remember to join us next month as we explore community partnership lending, and I just thank everyone very much for their time, and Chris, especially for you. We wish you and your partners a lot of luck, and we'll keep watching what you're doing, and hopefully be following up and you know, learning all sorts of stuff once you're up and running. So thanks very much.
Thanks so much to you, Alyssa, and to Ali for setting this up, and for you for hosting this, and to BALLE as well, and everyone in the audience who had the patience to listen to all this and the interest in listening to all this. Thank you.
All right. Thanks so much. Take care.
Cheers, you too.